Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and the data sets for April 29th, 2025. And with that said, let's go ahead and jump straight into the data. Now, again, there wasn't any data for today, Monday, um, so nothing to cover. But for Tuesday, we do have the JOLTS data and the consumer confidence. The consumer confidence is the one I'm really looking forward to, and that releases 30 minutes after open. So if you have call positions, grab a couple puts. If you have puts, grab a couple calls. Just make sure you have your positions hedged for the opposite direction. Now the Atlanta Fed GDP usually doesn't move the market too much, so I'm not expecting a whole lot out of that. Now tomorrow is a really big day. Tomorrow we have PCE, we have the non-farm I can't talk non-farm employment changes. Uh, there's another important, yeah, the personal spending, that was an important one. So big day tomorrow, or I mean Wednesday. But Tuesday not so much. It's mainly going to be the consumer confidence for that one. Now I would usually go over earnings right now, but there really isn't any major earnings I'm looking forward to tomorrow. There was First Solar and I believe Starbucks, if I remember correctly. But I'm not likely going to be playing either of those right now. So going to skip the earnings, but we will discuss the earnings on Wednesday because those are big. So um, that's tomorrow's video anyway. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting straight into the technical analysis. Let's go ahead and open our daily charts and pull up the moving averages and the Bollingers. Now, I'm not going to really discuss the Bollingers right now because we're quite a ways from either one. So, unless we get some crazy upper Bollinger move, I don't think that's going to happen tomorrow, unless some absurd news drops that I'm not, no one really knows about. But anyway, the market closed today at 550.85. And the 5 mile is currently at 542.17, so it's about $8 underneath the market price right now. Very likely we're going to see the 5 mile open in that 545 range, give or take. It could be 544, could be 546. Just as always, make sure you mark it down on open because that level is going to be really important. I'll discuss it in a couple of minutes. Now, today marks the first real bullish alignment of the moving averages, and it's just barely there, but it is there. And what I mean by bullish alignment, we have the 5 mile above the 10 mile, and we have the 10 mile above the 20 mile. So that's a really strong bullish signal. That's usually one of the main breakout signals you look for when you're really looking for a major reversal. So that's potentially really good, but as I mentioned in yesterday's video, that could still potentially be a consolidation signal. Now, with that said, the 10 mile is currently at 535.35, and the 20 mile is at 534.42. So there's really not much leeway between the two currently. Now, the 10 mile will still be pulling above the 20 mile faster, so each consecutive session where we're still above the 20 mile, we're going to be seeing the 10 mile basically lifting up above the 20 mile at this point. And that's a bullish sign. That's something you look for when things are starting to rally again. For example, let's take a really good rally. So right here's kind of that example. You had uh, the moving averages were in a bearish position, so you had the 20 mile above the 10 mile and the 5 mile. But once the major buying started, we see the 5 mile pull above the 10 mile. The 10 mile starts gravitating away from the 20 mile, and the 20 mile starts slowly lifting back upward again. And all these levels start pulling away and stop consolidating. Um, that's how you get those big moves upward. And that's consistent even up here, as you can see. The 5 mile is above the 10 mile, above the 20 mile. Same for right there. Same for right there. So it's a consistent signal uh, or indicator to be looking for when trying to potentially spot major bullishness. So we are starting to get into a bullish posture, but if we do have some major rejection here, then that 5 mile can very easily pull back under the 20 mile, and the 10 mile can very easily pull back under the 20 mile again. So as bullish as we are right now, we are still far from out of the woods. Uh, with that said, turning off our moving averages now and going over the ADL. I didn't go over it yesterday, but we are still in this kind of chop range, okay? And we're still experiencing that chop a little bit. As you can see, today's session, even though it was a major, buying session, uh, the ADL barely moved. And as you can see, the candle on the daily has actually been going downward. So is this controlled selling? Potentially. We'll see. Maybe that's just me having a bear thesis. I don't know. But that is a signal I'm starting to look at, is that if this was really as bullish as it's saying it is, then I would want to be seeing a lot more of this area right there. I would want to see this ADL really picking up. Currently it's just kind of flatlining here in a really potentially bad chop area. So we do have to be aware of that. And we do have to be aware of the fact that the market price is above all the moving averages. So pulling the moving averages back up again. The market price is, like I said, a full $8 above uh, the 5 mile right now. On open tomorrow, it'll very likely be a full between $3 to $5 above the 5 mile. So it's closing in on that range. Now, quickly going over the hourly, because we do have some nice structure building here. Sorry, I sound tired. I've been extremely exhausted, as usual. Okay, so I'm trying to hide this one moment. Okay, so I'm just going to very, very quickly go over this. Okay, so I have a bunch of it drawn from yesterday. Hold on. If you hear my daughter screaming, that's because she's taking a bath, and that's actually her having fun right now. Um, okay, so I'm still kind of looking at this as a bearish. I need to go to a different time frame to see this better. Okay, let's delete this. We need to delete some of this. Hold on, just 1 second. Just need to tidy up, because this will drive me absolutely crazy. Okay, so that circle was me saying that this area is a really, really key, important area. And that still remains true. Deleting all this stuff currently. Now, this area is really key still, because if this is a head and shoulders like I am drawing this out to be, and I'm going to draw a micro head and shoulders here, because this still potentially can be, then tomorrow we'd be looking for the 5 mod test literally right in that area. And that 5 mod test would be rejected. Okay, and that's for the bearish thesis, right? The bearish thesis says that we test the 5 mall and build the right shoulder and reject downward. Okay, and very likely start heading back downward and closing this larger, but still micro inverse cup right there. I'm sorry there's so much drawing on the screen. It looks terrible, but just try to follow along with me if you can. Okay, so that's the bearish thesis. Now, the bullish thesis here is starting to get pretty thin because bulls are going to want more liquidity here soon. So they're really going to want to start testing this 5 mile anyway. And let me delete some of these bearish lines for a moment. I'm going to continue to show that head and shoulders though. So showing that we do have the cup formed, okay. We do have partially start of potentially a handle forming here. So we could start seeing it pull down and in this area start building a handle. Okay. Now at the top of every handle, what we look for is a bearish structure. So very likely on the day we're looking for some sort of head and shoulders or inverse cup, some sort of signal to tell us that we will go down. Okay. If that happens, then we write that down and we will find the bottom of it when we start seeing a reversal pattern slash bearish pattern or bullish pattern. And what a bullish pattern would be is like an inverse head and shoulders or a cup and handle. Sorry, I'm not drawing this as good as I could be, but you know, something to signify that this is not going to continue heading downward and breaking down, and that this is going to continue heading upward to fill this larger cup, which we had outlined yesterday, which I'll just quickly outline. It's not going to look good, I apologize, but um, you know, it's essentially right there. Okay. So continue looking forward to that being filled out if you're in the bull camp, but you do want some more liquidity here. So very likely, like I said, bulls and bears are very likely kind of wanting the same thing. It's just we want different outcomes right now. So you guys would want kind of like that rejection to form, but instead of it continuing downward and filling out those inverse cups, right? You'd want it to head upward and basically blast the bears away, fill out that upward bullish cup, and um, you know, complete that structure out. With that said, though, it should be still a fairly easy day tomorrow. Uh, losing my train of thought for a second, sorry, but basically at this point of where we're trading, since we are above support, we are above the 5 mile, we're above the 10 mile, above the 20 mile, underneath the 200 mile. We need to wait for the 5 mile support retest. That's kind of the next step for the market. Doesn't matter which camp you're in, whether you want this to go upward or not. We do have to start pulling downward to test liquidity. Now, with that said, and I'll just very quickly go over how the 5 mile test would work. So, assuming the 5 mile opens up around the 545 area, give or take, that would mean the upper range of or the upper bounds of the 5 mile test would roughly be in the 548, 549 range, which means that with where the market is right now, we could be testing that level as soon as potentially pre-market. Okay. Now, the lower bounds of the 5 mile test is still quite a ways away, but it's down at the 542.5, give or take. Again, that will pull downward as we are pulling downward. So if we do start selling pretty aggressively, that lower bound can go all the way down to the 540. Okay. Now that kind of also leads into the 20 mile test. The upper bounds of the 20 mile right now is around the 537 range. So if we do have a massive sell tomorrow for some reason, and say we pull down all the way to the 537, 538, then we are starting to be in the upper bounds of the 20 mile range, which means that we can test the full 20 mile. And the lower bounds of the 20 mile is at the 532. So potentially we have a very large elevator downward. And this could all still be very bullish. Could still be bearish as well, right? But uh, support does need to be tested. Look at the 5 month first, see if the market rejects or accepts that level, and from there we will see either we head upward towards the upper Bollinger from this level, or we head back downward towards the 20 month. So starting to get to a really key level in the market. The next few days are going to be pretty detrimental, even though I didn't really think they would originally. But yeah, we're starting to get in a really major area. So with that said, trade safe tomorrow, everybody, and have a great day. And I will talk to you in the next video.